Hello, thank you for joining me. Welcome to my investing channel for the Analytic Stock Picker. This channel is dedicated to financial analysis, rational thinking with regard to the financial markets, and in particularly trying to find solid stocks that you can invest in for the long term with comfort that your money will grow and be protected. That's what I look for. That's what I want to talk to you about and have a dialogue around companies that we think are very interesting, companies that are profitable, that have low debt, and that grow. And I'm going to put forth ideas, and I want you to react to those ideas, and we'll have a dialogue and kind of help me smell check my assumptions around a company, and we can grow and develop as investors together. That's the name of the game. I want to start off with the paper that I read every week that I've been reading for the last 20 years, and it was started in 1921, I believe. The Barron's Financial, fantastic paper that does an amazing job every week summarizing what's going on in the financial markets, proposing investment ideas. They have their stock picks every year that they that they believe will perform. By and large, I find the information accurate and true. They have made a number of very good calls over the years that I've been reading it, and I've continued to subscribe and continue to read it because of that. And so I'm going to share some of that with you, how I approach it, how they approach it, and walk through investments, particularly with regard to the coronavirus, which is currently going on and causing panic. There's no other way to say it. This headline here is the crisis playbook, if you can see that, and they're looking at the volatility of the market during the last what is this? During the last week. Wow. Amazing. The Dow Jones right now is off 20%. The longest running bull market in American history has been 11 years and is now over. The bear market is upon us, and what I want to do is lean into that. If you know, I fundamentally believe that America will continue to prosper and continue to do well over my lifetime. And I want to be a part owner of companies who support that and who provide goods and services into that economy as well as the global economy. And if things are on sale, 20% off, we need to be looking at that. And we need to be diving into it and finding things that are underpriced, that are sold off in a panic. Now, I think the best article in here this week is this article by Al Root. Fantastic, Al, with perspective. What this is doing is this is showing us, if you can see that, this is showing us what's the time that it took to develop into a bear market from the different bear markets that have happened over the last 100 years. Everything from the Great Recession to the Black Monday of '87. I think the 1929 crash is on here. So this chart is saying how many days from peak into 20% drop did it take, with the duration down here in the bottom, and on this side is the individual events here, being our current drop, 19 days. 19 days, we lost 20% of the market. Is that rational? Doesn't smell like it. It sounds like panic selling and people just hitting the sell button regardless of value, cash flow, why they bought into it just, 3 weeks, 3 days, 3 months before the fall. Suddenly now everyone thinks the market is going to go away. And that's just not the case. I want to give some perspective here. So We're off. Let's see, the Dow has fallen 21% since its peak on February 10th of this year, 2020. 29,398. It's down 21% through this Friday, March 3rd, 2020. Dow was 23,185. That's a kick in the teeth. 20% off your portfolio is no joke. I'm not trying to make light of it. I'm just trying to say, if you believed in your portfolio 2 months ago, your portfolio is now on sale. Why not buy more? If you like what you own, if you bought it because there was a fundamental reason that you bought the company in the first place, that company is now on sale, why not buy more? Food for thought. We're gonna look at this. So some perspective. Market's down 20%. What happened in the great financial recession that we had in 2008? How long did it take to go to a bear market? All right, so if we look at the financial crisis of '08, it took 184 days. What is that, 6 months? Yeah. For us to decline, that was sheer panic. Remember Jim Cramer on MSNBC, screaming that it's just they know nothing. He kept saying they know nothing. He's yelling and screaming because the markets were locked up. People could not get cash. Lehman Brothers was bankrupt. Banks were going under. The problem there was people couldn't get any money to do what they wanted to do. Is that this scenario? No. Liquidity's still there. Banks are in business. The stress testing that the Federal Reserve has had the banks do, they've said that the banks are in the best financial situation they have ever been in the history of banking in the United States. The Fed is lowering interest rates. They're making their opening monetary policy available to the banks to be able to borrow and get access to cash. So what led to the financial crisis of '08, the reason that it fell so deep, yes, mortgage bonds were an issue, the CMOs, the collateralized mortgage-backed securities were an issue, and they were troubling. But the reason the market fell is nobody had access to liquidity. Here, the banks are still in business. The Fed's extremely responsive with cutting interest rates, with providing open market operations and cash. The banks themselves have been stress tested and are in a very solid position. So I don't think it's going to be an issue of cash. I think it's just the uncertainty that's causing people to panic, and in times of uncertainty, we need to be leaning in. I think what does Buffett say? That value is what you get, the price is what you pay. I think that's right. There's value in the companies that are for sale in the markets, and the price that you're paying is 20% less than you were paying 19 days ago. So that's the financial crisis of '08. 184 days it took to get where we are right now. The other comparable is Black Monday. In 1987, October 19 of 87, the stock market fell 22.6%, 508 points in a single day. Now, here's some perspective. What was the Dow on the Monday before the fall? 2,247. We are more than 10 times as large as the Dow. The Dow is 10 times larger now than it was back then. So if you panicked in '80s and sold, I mean, how many of us would kill to have a portfolio back then that we have held till now? I know I would. I wish I was just born in the early '80s. I mean, I wish that I had a portfolio back then that would be worth millions. But at the time, 20% in a single day is pandemonium. Same thing here. 20% down 19 days, sheer panic. But the one thing that all of these down bear markets have in common, every single one of them, except this one, every single one of these, the market is higher now than it was in any of these times. The market recovered. This market will recover. And when it recovers, you want to own assets that are going to grow for another 5, 10, 20 years and get them at a great price. That is what we're trying to do. And if you can do that, your return is going to be fantastic. You will beat the market. You will. You will. If you buy at a low point and the market recovers and you're buying companies that perform at market, you got them at the best price, you outperform the market. So let's keep going. What I want to do is, like I said, go through stocks, use this channel to describe what I see in the market on a weekly basis. Try and look at individual securities and have a discussion and see what we should be putting our money into. Both you and myself, we're all professionals. We have other lives. This is not a day trading channel. This is not a get-rich-quick scheme. This is a methodical approach to owning companies. And the way we're going to look at this is, if you had to buy, or you had the opportunity to buy, the entire company. So not just a share of Google, let's say, for $1,200 or $1,300. But if you own the entire company, how would you approach owning the business lock, stock, and barrel? And if we look at that as our mindset, and we say, I want to own this business because it's going to do well, and I'm going to buy all of it. That's such a massive transaction. It's such a big piece of your net worth. Not that it's even possible, but if you did put all of your assets into a particular business to buy outright, you would be much more conservative with when you sold it. You would not flip it the next day because the stock went up 5% and you made 5% in 2 or 3 days. That's not what this is about. Most of those people don't make any money. They pay a tremendous amount of taxes, and they miss the biggest piece of value, which is the dividend that you receive and the shareholder repurchasing. I think over the long term, and I'll get into some other readings of other books that have done this testing, but that return over the long term goes parabolic as you own more and more, a greater percentage of the outstanding shares. Both the price appreciation that you get from that, and then the dividend growth that you get, because there's a fixed dollar amount that's available for dividends on an annual basis from a company. But you own a greater percentage of the company because of share buybacks. You get a greater percentage of those dividends. Your dividend grows, that cash flow to you grows, and it gets bigger and bigger over time. And it's very hard to see that looking quarter to quarter. So we're going to approach investing from, I am buying the entire business. What is the entire business worth? What has it traded for historically, and where is that price relative to what it's traded for in the past? And where can we park money that over 5 or 10 years will outperform? That's the objective. And I'm going to be releasing videos on a weekly basis. Some are going to be very detailed, stock analysis, discounted cash flows, EV to EBITDA, and we're going to go through some of those ratios. Others, it's going to be commentary on financial situations such as this one. But please comment, subscribe. Feel free to email me as well. I'll put my contact information down there. And let's have a conversation, have a fun time talking stocks. Thank you very much. Take care.